Fellow Forex traders. In today's video, we are going to be reviewing exactly what happened on EurGbp on the 15th of August 2022. And without further ado, let's go. So first of all, on the daily time frame, this is the daily time frame, each candle represents 1 day. What we are seeing is that on Friday, before the market opened on a Monday, there was a strong wick rejection right here. So from the get-go, this is my point of interest. Strong daily rejection right there. So we're building a story, top-down analysis, and then we'll drop down to 4H. Once we drop down to 4H, we're seeing if there's any more confluences. It's about building up a story. So we can see that within that strong daily rejection, what caused it was that there was a supply zone over here. That rejection caused a strong supply zone. So right here, we are going to mark out our 4H supply zone. Okay, every time frame that we are seeing something happen, we mark it out and we leave as we're dropping down. Okay, so that being said, we now are going to enter into the Asia session. The Asia session is when the market usually consolidates, especially if it is a European pair, such as EurGbp. It's a European currency pair. There's no Asia involved in it. So there's a high chance that the Asia pair is going to consolidate or go sideways. And that's exactly what happened. Drop down to 1H time frame. Okay. This indicator, what it does is that it summarizes the Asia high and the Asia low. Right there. So this gray box is the Asia session. It's both Tokyo and Sydney put together at the summarizer. So anything from 10 p.m. the previous day till about 6 a.m. in the new day, those 8 hours, those 8 candles is my Asia session right there. So now I know that in the London session, usually the first move is the fake out. The first move is the liquidity grab. The first move is not the real move. Even if you analyze what happened on a Friday, you can clearly see that there was a liquidity grab right here. Okay, so there were people who had stop losses on this level right here. And what did the London session do? It went below this point, grabbed all the liquidity that was resting right below this swing low, and once it did that, it just went to the upside. That's what usually happens during the London session. The first move is not the real move, and if you know this, you can capitalize on it and enter and make profit. So that's what happened on Friday. So now I'm anticipating some sort of move to the upside. Once I see that there's a move to the upside around 7 or 8 a.m. and I see an M15 or M5 engulfing to the downside, I'm taking it, placing my stop loss just above the entry candle and taking it to the downside. So now let's go down to 5 minutes right there. Between the hours of about 7 a.m. till about 9 a.m., we usually get strong moves in the market. Those strong moves in the market indicates it is when big money enters the market. Market makers are pushing the price in a specific direction in order to take liquidity, and then they will take it to the other direction. So 7 a.m. and here is 9 a.m. We expect a strong move. Market is still going sideways. It hasn't broken any of the Asia high or Asia low, but now it did. Now we have a break to the upside. Okay. Now that we can see that there has been a strong break to the upside, all the liquidity which was resting around these levels, everything that was resting around these levels has been taken. Anybody who has placed stop losses or buy stops around those levels, everybody has been taken out. So now that the market has grabbed liquidity from that level, it's now prepared to either continue or take the price in the other direction. Okay, so before that, we also have another swing high liquidity right here, because on top of every swing and on top of and below every swing low, there is actually liquidity resting in those areas. So the price actually didn't just stop on the Asia high, it actually went above this swing high liquidity into this supply area. Okay, into the supply area. And what do we have here? We have a strong rejection. Once we get the strong rejection, we also have a second candle which partially, it didn't fully engulf, but the body engulfed the body of the previous candle. So for me, that right there, this is substantial enough for me to enter. I usually place tight stop losses just like so, and first take profit is going to be Asia low. Second take profit is going to be the low of the previous day. Once I reach this low, I'm going to move my stop loss to break even, and I'm just going to let the trade run. That's what I would do. I didn't enter this trade, but that is exactly what happened. First take profit reached. At this point, I would have moved my stop loss to break even, just like so. So now it's a no risk trade. Make sure you always do that. Protect your capital at all costs. Second take profit reached. And at this point, I would have just let the market go as low as possible till about 1 p.m. Because around 1 p.m. GMT time, it is when the New York session happens. And in the New York sessions, the market actually either continues in the same direction or it reverses. So if during London session, you've made all that profit, in this scenario, it would have been, in this scenario, we gain 30 pips. If you gain 30 pips and it's close to around New York session, I will just take the profit, close my trade, and then look for another opportunity somewhere else. So this is exactly what happened on EurGbp on the 15th of August 2022. Thank you for watching. I hope you found this valuable, and if you liked it, please leave a comment, like this video, and subscribe to this channel. I will see you in the next one. Take care.